Gold's at 4,000 or very close to it. Silver should hit 50 any day now, and once it does, I think it's going to explode higher as we break through a 45-year resistance and we find a new level for silver that will be closer to the 30-to-1 ratio that we hit in 2011. I don't know how long it's going to take, but silver's headed to the triple digits for sure. Not in a very long time either. It could be months. Something like today, silver is at 48.50, still relatively dead. The gold silver ratio is still like 80 something to 1. And remember, in 2011, it went down to 30 to 1. If we get anywhere near there, I think that means that silver is in the triple digits, 100, 200, 300. I don't even remember what it was. I don't remember the math, but it's a lot higher than it is now.
In today's precious metals headlines, gold climbs above key $3,900 level for first time on safe haven demand. Gold prices touched an all-time high on Monday, soaring above $3,900 per ounce level as investors flocked to safe haven bullion amid the U.S. government shutdown, broader economic uncertainty, and prospects of further Federal Reserve rate cuts. Washington will start mass layoffs of federal workers if U.S. President Donald Trump decides negotiations with congressional Democrats to end a partial government shutdown are absolutely going nowhere. A senior White House official said on Sunday, there are concerns that the U.S. government shutdown could become protracted with a negative impact on U.S. growth, said independent analyst Ross Norman, adding that a pervading sense of caution in financial markets helping gold. Gold has climbed nearly 50% so far this year, underpinned by strong central bank buying, increased demand for gold-backed exchange-traded funds, a weaker dollar, and growing interest from retail investors seeking a hedge amid rising trade and geopolitical tensions. This rally, characterized by low participation and primarily driven by central banks with a long-term outlook and steady investors rather than speculative buyers, indicates that any pullback might be milder than expected, Norman said, adding that this could present a buying opportunity on dips while the rally maintains its momentum. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
The first chart I wanted to share with you today is something that I'm covering at the Endgame Investor at Substack. And it shows how much of an idiot I am and how I'm so wrong and I don't know anything, because the daily repo volume is now over 100% of available reserves. There are about $2.966 trillion in reserves available, and there are over $3 trillion being traded in the repo markets right now every night. So that means that more dollars are being traded every night than actually exists to be traded. How is this possible? I don't know. Could be the numbers are off. Could be that something else is happening that I don't really understand yet. But you know what? Gold is at 4,000. Silver is at 48.50. When you look this good, you don't need to know anything more about that on the Endgame Investor on Substack. And I will try to figure out the mystery here. But either way, this is not going to continue. I don't know how much longer it has, but if we go to the Comex, what is going on with Comex silver? This is the silver supply going back to 1971, looking for any kind of pattern that can explain what is going on with the silver supplies. You see here the spike since the beginning of 2024 from about 8,000 tons to now 16,543. The silver supplies in New York have basically doubled in 2 years. That's scary, and all this silver is going offline because a lot of it is going into cold storage, not for sale. There's some for sale. There is a good amount of silver for sale against contracts and the registered supplies, but a lot of it is ineligible, meaning it's not for sale. These are humongous whale stackers. We don't know exactly who they are, but they are piling up huge 5,000 ounce bars, and we don't know why. But if we look at these little rectangles, and I made them thin so you can see what exactly they are bracketing here. This is the 1980 run from the end of 1979 to the beginning of 1980. That is the big spike over here. What was happening in the silver supplies? They were kind of going up. They were going up appreciably, but nothing compared to what they are now. So there wasn't much of a move there because in 1971 or 1970, silver supplies were much higher than they were in 1979, 1980 in New York. So not that much of a correlation there. But here we see that as silver supplies were going up from about 1980 to 1993, you can see that the silver price was falling in a descending triangle from about the beginning here in 1983 to 1993. And around here is when, what's his name? Buffett, that guy, what's his name? Warren something. He stood for delivery of silver around here. And then the silver supply started draining, but there wasn't much move in the silver price. So we don't see much of a correlation between the silver price and the silver stacks in the Comex vaults. Same thing in 2011, there wasn't much of a correlation at all. You can see here the move from 2010 to 2011 from it looks like about $12 to $15 or whatever it was to 50 in a matter of months. Not much movement in the silver supplies here. They went slightly down, but nothing alarming. And here is where we see what happened from 2020, from the lockdowns, those glorious medical miracles that saved all of our lives.
In today's news recap, UBS raises gold, silver price forecasts again. UBS has raised its gold and silver price forecasts again, flagging strong momentum from investor demand, macroeconomic uncertainty, and persistent fiscal and geopolitical pressures. The bank now expects gold to reach $4,200 an ounce across all time frames, up from its prior view of $3,800 by end 2025 and $3,900 by mid 2026. Silver forecasts were lifted to $52 and $55 an ounce, compared with previous targets of $44 and $47. UBS strategists said the revisions reflect expectations of stronger central bank and exchange-traded fund demand, alongside ongoing support from declining real rates and fiscal imbalances. The strategists also pointed to silver's greater room to overshoot, given its higher volatility, adding that their forecasts remain skewed to the upside. The team said macro, political, and fiscal dynamics should continue to support demand for safe haven assets, allowing the current fear of missing out mood to persist. UBS also expects the gold-silver ratio to move towards 76 times, reflecting stronger silver investment demand relative to gold. Underlying drivers include the Federal Reserve's return to rate cuts, a weaker U.S. dollar, and fiscal deficits in major economies such as the U.S. and France. UBS sees these factors as unlikely to be resolved soon, keeping the backdrop favorable for real assets. Central banks are expected to buy 900 to 950 metric tons of gold this year, just shy of last year's record, with private investors also increasing allocations as a hedge against U.S. Treasuries exposure. While gold and silver lead, UBS remains more cautious on platinum and palladium, which are still tied closely to industrial demand. The bank raised its platinum forecast to $1,350 an ounce, up from $1,200, but said the metal still implies lower prices ahead. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
2022, silver was going down, the silver price was going down, and the silver supplies were going down. But here is something that we haven't ever seen before, and that is a doubling of the silver supply with a more than doubling of the price. So this is the first time we are seeing silver stacks move up in the Comex and the price also go vertical with it. First time we're seeing that. What does that mean? It means something new is happening here. What is happening? Well, the dollar is collapsing, and that's going to lead to silver becoming money once again, because once credit collapses, there's no other way to exchange other than with money itself, because everything else is a derivative. But where is the demand coming from? Is it the ETFs? Not really. Here is a close-up. We're going to go into the farther out, zoomed out chart in a second. So you'll see this isn't much of a climb. It is a climb. It's not much of a climb. But you can see here, the last 3 days, we've had these three bars over here. If you total this up, it's about 17 million ounces in 3 days have been drained from the ETF. 17 million ounces go out of the ETF, go back into the vaults, either in London or in New York. They're able to do this because there isn't that much retail demand for SLV or other ETFs. Otherwise, they would have to stack silver in the ETF to keep it in line with the silver price. The fact that this is going down means there is less demand for ETF for retail traders because they're just not interested in silver yet because it's not going high enough fast enough, but it will. So no demand in ETFs, no demand in the physical markets for the stackers because, as I said, I just had an interview with Brian Kuzmar who said the spreads are far apart, which means there is no activity and no demand. Here I wanted to go into silver squeeze, but we can see here the ETF demand. The only movement that ever increased ETF demand substantially was silver squeeze, excluding this part over here, which was the post-lockdown frenzy for silver. That really was a huge move in the silver stacks. This is the amount of silver in the SLV ETF. It went up from about the lockdowns to about the middle of 2020. I think that's August 2020. And then it stayed kind of steady until silver squeeze and then fell. So if we look back at the 2011, 2010, 2011 rally to 50, we can see here there was a little bit of ETF demand, not that much. It was slight, it was appreciable, but it wasn't humongous. It wasn't anything like this, right? So we can see here that even the 2011 rally did not have much of an effect on the ETF demand. It had a little bit, but not that much. The only thing that had a big effect on ETF demand was silver squeeze. That was it. And here is the move from silver from about 27 to now 48. So about a doubling in the silver price. And here is the move in SLV from, what is it, 400 and maybe 40 million ounces to now 487. So about 40, 45 million ounces. That's not that much. There hasn't been much demand in SLV. So once these three cylinders get going, meaning physical markets and ETF markets and whoever is stacking in New York, who appears to be continuing to do that, imagine where the silver price will be then. It will be in the hundreds, and that could be relatively soon, which is why I shared an options play on the Endgame Investor on Substack for paid subscribers. And if you sign up, all of the new paid subscribers will also get that idea that you can still execute, though there isn't that much time left. U.S. real estate. I wanted to go into this in terms of gold because we broke a low here in terms of how many ounces of gold it takes to buy a single house. We broke below 120 ounces. I think that is the low here in 2011. This is September 2011 when gold hit a bull market top over here and then had a bear market over here. But now that is done. We hit like a triple, quadruple, whatever top here. Couldn't get through that resistance. And now we are below 120 ounces of gold per house. I expect this to go down to the 1980 level of that looks to be around 70. It's going to get lower than that in Weimar. Remember, it took about a $100 bill to buy a swanky house in Berlin. That's about 5 ounces of gold. I expect that we will go there for a time. It will not be sustainable and it will not be sustained, but for a time, you will be able to buy a nice sized house for about 5, 6, 7 ounces of silver. Exactly what it will be. It won't matter because the stackers will have a much more than that, and it won't even make a difference. What about silver? Well, that we haven't we haven't broken through the trend line yet, and we haven't hit resistance yet at about just below 5,000 ounces. Maybe that's 4,900, 4,800, something like that. But here is the trend line from 1980. We can see here we were about, what is that? Maybe 1,700 ounces, maybe 1,500 ounces in 1980. I don't know exactly what it is, but we have to break through 10,000 and get through this trend line, but we will, and we'll see this number fall faster than it will in gold, and we should break below the 1980 line here if we do get to the Weimar area, then you should be able to buy a decent house for about 75 to 100 ounces of silver for a short period of time. At that time, you don't want to necessarily find the best deal. You just buy whatever is available because everybody needs silver because there's no other way to divide labor because credit doesn't work, which is why prices in silver will be so low at that time because of the desperation for real money with which to divide labor will be in desperation levels. UK real estate, just wanted to look at that. These are all from Gold Charts R Us. UK real estate is pushing 100 ounces of gold for a house. This is the average in all UK property price. I don't know how exactly accurate these are. These are estimations, but you can see here the trend is obvious. We're going to break through 100 ounces in the UK. One more chart, UK housing in silver. You can see we broke through 10,000 ounces. We're at 9,722. And we have a trend line. I didn't actually draw it here. I think we're right on that line from 1980. If you draw a trend line here, touching the 2011 high, and then touching here, I think we're right on that trend line, but it doesn't really matter. These things aren't exact. I also wanted to go into China real estate. Since we're talking about real estate, let's talk about China real estate. I haven't really covered this, but Phil Lowe of the Bitter Draft alerted me to this guy in China who was talking about Chinese real estate. It's really bad. This is China property investment year over year. I don't know what the units are. I'm just looking at the trend here. You can see here, China property investment has been falling net since 2022, and it keeps getting worse and worse and worse. There is a real estate bust going on in China, which is very serious when you have an entire country that is forcing everyone to put their savings in real estate. Ghost towns of crappily built housing that even made in China. When you see made in China on a tag, it doesn't seem good. So, but they're in China and it's made in China because it's real estate in China. It's really bad stuff. This whole thing, China's screwed. Forget it. They're
What do you think of Salente's take? Will gold continue to rise in the fourth quarter of 2025 and beyond? Are we approaching a major top in the global markets? Post in the comment section down below your honest opinion. Subscribe if you have not yet done so. And check this video right here because it's a perfect fit for you, and I'll see you on the other side. Thanks for watching.